Welcome back. Today we're going to be chopping up Opendoor, ticker symbol OPEN. And listen, we're going to chop this one up. As Chucky Online would like to say, we're going to unpack this. Yeah, we're going to unpack this. But listen, I've unpacked this in another video, which I'm going to put the link in the description. And this is going to give you all of the information around Opendoor. So yeah, definitely check that video out. We're not going to be recapping all of that information, but if you want context exactly about Opendoor, the business and what it is, what it does, then definitely check out that video. Link will be in the description. In this video, however, we're going to be looking into the future and why this stock has now become my biggest holding in my long-term investment portfolio. Not because I've added any more money, because it's shot up recently, and I'm going to talk to you a bit about why, and why I feel like there's a few catalysts for it to shoot up in the short term quite considerably, and long term I still feel this is going to be an amazing opportunity, you know, for you investors. So yeah, let's unpack this, let's talk about it, and yeah, let's get straight into it. So what you can see on your screen is Zillow, and there ain't no mistake. The reason why Zillow is on your screen is Zillow has a part of their business called Zillow Instant Offers, and Zillow Instant Offers is basically a direct competitor to Opendoor. So Opendoor and Zillow Instant Offers are basically the exact same business model in terms of taking people's houses on a really quick one, you know, giving them that money, holding those properties, selling it off, and obviously making a profit from that front. Now, Zillow just had their earnings, and they had a fantastic earnings update in which they've obviously grown their share value by about 16% since their earnings update, and now the value of their stock is around $200. Now, Zillow obviously has a more wider business than Opendoor, similar to Rightmove in the UK or Zoopla. You know, the whole advertising and their listings part of their business is their key business, and that's where they make, you know, a majority of their revenue. But obviously, you know, in this great reshuffle that's happening because of the whole Divock 91 situation, and you've got people working from home and choosing to maybe upsize to bigger locations because they know that they can work from home rather than be in maybe a city where there's high taxes, or rather than be in a very small apartment that's close to where their office is located. If their company's like, look, you can work from home indefinitely, they might as well move to the suburbs, get a bigger house where, you know what I mean, little Timothy and Susie can run around, and obviously then do their Zoom calls from their new office. And, you know, because of that, companies like Zillow, companies like Opendoor, I personally believe are really benefiting from this current climate at the moment. So you can see their earnings was really good. Their stock is now $200 a share, and their share price rose about 16% off the back of their most recent earnings. One of the other things that someone brought to my attention is the fact that they're actually acquiring this touring tech company. So this is, you know, going to enable online digital touring of homes, which is obviously going to facilitate, you know, the buying or the leasing of homes much more quickly. And they're going to be spending 500 million to basically acquire this business as well. So from a Zillow perspective, which is their competitor, you know, I want to keep it all the way real. I am an investor in Opendoor. I'm not an investor in Zillow, but actually Zillow is showing extremely good signs of being a great investment as well. However, I do feel that this is actually naturally going to advantage Opendoor in general. So sometimes you get this halo effect where if the industry is doing well and a certain company in the industry is doing well, then the whole industry is gonna do well. And I believe in Opendoor just from their primarily from the perspective of the fact of what they're doing as their whole business, rather than focusing on listing and leasings and all the other stuff. And listen, all the stuff was in the other video, so, you know, go check that out. Now listen, what you can see here is that over the last week, the Opendoor share price has gone up from 27 to around the $35 mark. So that is around a 30% increase in the Opendoor share price alone. And there's not been anything that's happened with Opendoor. So this kind of is contributing to the halo effect. It's one of the reasons why this 30% increase has made this the biggest value position in my long-term portfolio. And I believe that due to the results of Zillow, that's definitely had a direct contribution to the Opendoor share price. Now, Opendoor's earnings is going to be on March the 4th. So definitely put that date in your calendar. I like to buy stocks around the earnings season, either before or just after, particularly when it's around long-term stocks, because, I try and buy it based on their finances. And so if I'm seeing that their earnings are growing, their EPS is growing, their revenue is growing, then, money starts flowing, you feel me? And then I start buying these stocks and holding it long-term. You guys start asking me, why am I buying this stock? That makes no sense. And then a year later, you're talking about Cloudflare the same way that I'm talking about Cloudflare. So listen, this is how I genuinely try and approach the timing of my long-term investments. But to be honest, I might buy a long-term investment at any given time. But if I do find a stock that I feel is pretty interesting, I normally wait until their next earnings update before pulling the trigger. That's kind of my personal approach, because then I can see whether or not I'm getting a good deal in a sustained business. Now, something you guys might find interesting is ARK Invest approach to both Zillow and to both Opendoor. Now, ARK holds both Zillow and both at Opendoor, but the behavior that they've actually, demonstrated with each of these two stocks vary wildly. In fact, they're at the opposite ends of the spectrum, you feel me? Opposite ends of the pH scale. In the case of Zillow, is on the lower end, the acidic side, because what they've basically been doing is selling off. You can see here that, they hold positions in, I think, 3 of their ARK funds. Yeah, ARK just 1K. ARK F and ARK W, but you can see here that they've been consistently selling off Zillow since around September. So from September 2020 through to October, through to November. I mean, they bought a little piece in their financial fund in November the 9th, but they've consistently been selling. Now, you can kind of put that down to probably portfolio management, but it's been quite consistent and it's been in all funds. So I don't think it's purely down to portfolio management. And also because of their recent earnings update, which was so good, you would expect obviously for them to kind of, not really do that much selling. But, that is one thing to potentially bear in mind. However, in the case of Open, what you can actually see is the complete opposite. You can see that, from recently, as of recent of January the 20th, 2021, they've been buying Open through November last year, October last year, and September last year. So you can see a direct correlation that, from September, October, November, through to January, they're continuously adding to their Open position, whereas with their Zillow position, they're continuously selling. Now, this might not tell us anything. There could be a number of reasons why this is obviously happening, portfolio management being one of them. But I personally believe that when they're looking at future next-gen innovative technologies, innovative businesses that are going to be, some of the key leading players in the future, I'm not saying Zillow won't be, but I definitely feel that they have a strong conviction that Opendoor will be one of them. And that's one of the reasons why they're continuously adding to their Opendoor position. So listen, if you hold Zillow, I'm telling you now, just in case, to make this crystal clear, I think Zillow is a fantastic business. I've looked into their fundamentals. They're a solid organization and they're a solid investment. I'm looking at it from a pure growth perspective, and I'm saying to myself, which one can I get the highest growth opportunity? Which one can I get the highest bang for my buck? If this was a case of which is the most solid, safe investment, then Zillow would win hands down. But if this is a case of which one has a bit more risk, but potentially greater reward, then for me personally, Opendoor, hands down, wins. And obviously I've been in Opendoor since it was IPOB, before it obviously did the reverse merger. So I've had Opendoor for quite some time now, maybe like 6 months, something along those lines, maybe 7 months. I can't remember the date of the video, will tell you, but probably 6-7 months. I probably had this stock when it was the SPAC, before it obviously did that reverse merger. So yeah, I've definitely been bullish on this stock for quite some time. I feel like seeing ARK potentially buying, not potentially, actually buying some positions in this, I think is a little bit of a confirmation that, there is something about this business. And I think for you guys out there, definitely wait till March the 4th, definitely see what happens with their earnings. And if they do have favorable earnings, it could be an opportunity. Now, if their earnings is crap, then, it might just be completely avoid, or it just could be that it's a bad earnings update and actually the shares will drop, and it could be a good time to potentially buy on the cheap. So, it all depends on which ways you want to look at it. I'm definitely going to be watching their earnings update, and I'll be sure to give you guys an update of what's happened there and if anything's changed from my perspective, which I highly doubt it will. But you know, this stock is sitting at around $35 per share at the moment, and there's, you know, there's all the chance that it can definitely go to about $75 by the end of this year, which is what I'm potentially expecting. Anyway, for me, it's a long-term holding, so I'm trying to be holding the stock for 3, 4, 5, 6, 7, 8, 9, potentially 10 years into the future. Listen, hopefully you found this video useful. If you did, like, comment, and subscribe. Listen, I've got a lot of non-subscribers watching this video, man. About 70% of you are not subscribing to the thing. Subscribe to the channel, man. Hit the subscribe button. Preemarket, I'm out.